So I was completely wrong about AI. In this video, I want to show you guys why I closed out my long positions in Nvidia and AVGO and why I decided to switch to shares instead. I'm also going to talk about what's wrong with the market. How come companies are reporting good earnings, raising guidance, doing everything right, but the stocks are still having a massive correction? And last, I'm going to discuss how some of the biggest companies in the world plan to spend over $600 billion in capex this year for AI-related costs, and which companies can actually benefit from this year. So I value your time. With that being said, let's get right into it. So it breaks my heart to say this, but yes, I did close out my long positions on Nvidia and AVGO. Right, I value full transparency to this channel. I'm going to win some, I'm going to lose some. Sometimes things are going to play out exactly as you thought. So the reason why I closed out my positions is not because I don't think Nvidia and AVGO are going to do well this year. I think these companies are going to do amazing, right? Especially with all the capex, all the other bigger companies plan to spend on AI. The reason why I closed my position is because I just don't feel comfortable with the current state that the market is in. And because I don't feel comfortable, I just don't want to hold a lot of leverage. I don't want to hold options, right? The market doesn't seem to know what direction it wants to go. And that's okay. If you're not comfortable, that's perfectly fine, right? I would rather not take a lot of risks, right? And still buy shares, right? Because I still believe that these companies are going to do well in the foreseeable future. But we're seeing a common trend, especially with AI-related stocks, where the companies will come out, have amazing earnings report, raise guidance, do everything right, but the market is still not happy. It's like the market wants to have a good correction, right? Especially on these tech AI related companies. And one thing that I try to teach myself to do is to never fight the trend that the market is showing, right? What's the market structure saying, right? And so far it's saying that things have been really choppy and there's not a clear, like decisive direction that the market wants to go. And that's okay, right? I'd rather just buy shares and be patient until the direction becomes a little bit clearer. So now let's talk about what the hell is wrong with the market. How are so many companies still fundamentally strong, recording their best quarterly earnings reports, raising their guidance, but they're still having massive corrections, right? This is supposed to indicate that there's a lot of confidence from the company and the stock price is supposed to go up, but that's not what's happening right now. So let's take a look at the chart and see what's going on. All right, so let's take a look at the chart and show you guys what I'm talking about, because a lot of people have lost a lot of money the past couple of months, right? Even me, right? Because we're all thinking that good fundamentals means stocks should go up, but that is not the case. That's been happening for the past couple of months in the market. So let's take a look at a couple of stocks and show you guys what I'm talking about. For example, SoFi, right? SoFi had probably one of its best quarterly earnings report in the company's history, right? Guess what happened? The stock came down like, this is like what, 15+%? A crazy amount afterwards, right? Another example, let's look at Palantir, right? Everybody's favorite. All right, Palantir had, once again, one of its best quarterly earnings report. What happened? The stock came down a pretty massive amount from its previous point before the earnings report. What's another good example, right? Let's look at Reddit. The same thing, right? Even though the stock has been beaten down like crazy, right? Weeks prior to its earnings report, after its earnings report, the stock still had a massive crash, right? It's a common trend with a lot of these stocks, right? Meta had pretty good earnings reports, right? The stock is about to fill this gap, come all the way back down to the point that it was at prior to its earnings report. Right, Microsoft, stock was already beaten down like crazy, right? After its earnings report, which wasn't too bad, the stock still came down a good amount, right? And then we look at companies like Broadcom, right? Really good company, record-breaking earnings report, raised guidance, did everything right. So stock was already beaten up, but it still managed to find a new low of like 295 or something like that, right? The stock is still coming down. So before I give you guys my thoughts on why I think all these companies are still having massive corrections regardless of the fundamental financials, I want to show you guys a tip that's helped me a lot as a trader, right? Because I've made a lot of mistakes and I'm still going to continue to make a lot of mistakes, right? I'm not perfect, but one of the biggest lessons that I've learned so far in this whole trading career, right, since I started 2.5 years ago, is that you have to be completely objective when you're trading. Right? Because no matter what you think is going to happen, no matter what you want to happen, the market's going to do whatever it wants to do, right? So you would think, okay, company has amazing earnings report, fundamentals are doing right, the stock should go up. That's not always going to be the case, right? Companies' fundamentals aren't always going to reflect the stock price. And what you have to do to keep yourself objective so that you can make money going up and going down is, right, what I like to do, you inverse the chart that you're looking at. So for example, I look at SoFi, I would have thought, okay, company looks good, right? Great earnings. Let me go long on it, right? Buy call options because, okay, even though the stock dipped a little bit, it's going to come back pretty soon, right? If you would have done that, you lost a lot of money, right? And now, especially you did short dated options, you're probably down almost 100%, right? If you did longer dated options, now you're kind of praying and hoping that the stock goes back up to your initial buy-in, right? But when you inverse this chart, right? When I inverse SoFi chart, so look at this chart. Would you honestly short this chart, right? Would you honestly short this chart? I would not, right? And this is how you stay objective in the market. So for example, right, when I look at this chart, SoFi has been in this range for a pretty long time, right? It's been oscillating around this range right here. So when I look at this chart, SoFi has been oscillating around this range right here, and it finally broke out, right? It broke out from this resistance that it's touched a couple of times, right? As a trader, when I look at this, it's extremely bullish, right? You have a breakout from a stock oscillating for a long period of time. I will go long with this stock, right? So you kind of got to, have an objective narrative in the market because yes, you want things to go a certain way. You want certain things to happen a certain way, right? Sometimes things aren't going to make sense, but at the end of the day, the market's going to do whatever it wants to do, right? So you got to learn how to be objective. When I look at this chart, I would not short this chart, right? It's the same thing if, for example, let's say you love Reddit, right? Reddit's a great company, good fundamental financials, everything's going right, as far as the company's health and whatnot. But would you honestly short the stock? I'm gonna look at Reddit, it's just going straight up, right? Even though in actuality it's going straight down, but you wouldn't short the stock. So that's what I'm trying to say, right? At the end of the day, market structure is going to overcome everything else. Yes, fundamentals matter, right? The company needs to be doing well in the long term, at least if you want to buy shares and whatnot. But do not underestimate the power or the importance of market structure, right? Because I've lost so much money, right, not understanding this concept. And a lot of people have lost a lot of money not understanding this concept, right? Another example, if you love Bitcoin, right? You think Bitcoin is going to go up forever and never come down. Inverse the chart and take a look at this, right? If I looked at this chart on Bitcoin, right, this is the Bitcoin ETF, would you honestly short the stock? You wouldn't. You would go long because the stock finally had a breakout, right? After oscillating for such a long time, you would not short the stock. So learn to be objective. It's going to save you a lot of money in the long run. So I hope that makes sense to y'all. I can't tell you guys how many times I've round tripped my gains because I did not have the ability to be objective. It's going to save you a lot of stress and a lot of money in the foreseeable future. Now, why do I think the market is having this type of pullback where, companies are doing well, but it still doesn't matter? I think as a whole, the market's just having a correction. It's just exhausted, right? We went up a lot the past 2 years and things got overvalued, right? So I think the market's starting to just place these companies of what their true valuations should be or should kind of look like. On top of this, certain narratives are playing out, right? So from an AI perspective, there's a common trend going on where any company that's closely tied to OpenAI, they're having a massive correction. I think this is because the market is starting to realize how is OpenAI going to pay for all of its promises, right? The company currently has negative cash flow, right? They're losing way more money than what they're bringing in, and they don't expect to be profitable until like 2029 or 2030, right? So that's kind of pricing in, that narrative's kind of playing out, right? You see a lot of software companies having massive corrections too, and this is fear that AI could, take over a lot of those roles, right? So your SaaS companies are having pretty good corrections. On top of this, you see a lot of corrections in your fintech companies, right? So this might be primarily due to Bitcoin having a massive pullback. You see Robinhood, even though its fundamentals are still good, it's having a pretty big pullback, right? And it's kind of following what Bitcoin is doing. So a lot of narratives are playing out, but overall, I think the market is just trying to reprice these stocks because they had such a big run in the past couple of years, which is why I don't think it's worth finding a trend until something changes. So now let's talk about the massive capex that some of these big tech companies are spending on AI this year and which companies can honestly benefit from that. So who's going to benefit from all this crazy capex spending? I think it's really simple to understand. I think there's two groups that you can break this up into. Group number one are companies that are hoping to see benefit from this in the long term, right? Hoping to see positive cash flow, hoping that the demand for AI is still going to continue for the next couple of years, right? And then the other group of companies are going to directly benefit from all this spending. So this is what I mean. Group number one that are hoping to see some type of positive cash flow from this in the long run are companies like your Meta, your Amazon, your Google, right? Your Microsoft, companies that are building out large infrastructures that aren't currently built yet, right? But they're hoping that demand still continues to come for AI. And eventually all this, debt, all this capex that they're giving out right now can eventually turn to positive cash flow in the long run, right? And investors are watching this very closely, right? Because once again, this isn't positive cash flow, right? This is a lot of money that they're spending in hopes to make more money in the long term, right? I think those companies might struggle a little bit this year, right? Because there's still some type of uncertainty from investors, right? Because we don't know what's going to happen next year, 2 years from now, 3 years from now. There's still a lot of unknown. Now, the other group are companies that are going to directly benefit from this. So when you think about AI, right, all these different types of chips, GPUs, TPUs, whatever, you got to ask yourself, who is going to actually make these chips? Regardless of where it's coming from, AMD, AVGO, Nvidia, somebody has to make them, right? And you got your biggest manufacturer, TSMC. So I think they're going to highly benefit from this because they're going to be the ones making the chips. And these big tech companies are already, making a promise or have already stated that they're going to spend a lot of money on building out the infrastructure. So TSMC is going to see a lot of volume. I think they're really going to benefit from this. The next question that you got to ask yourself, what do all these chips have in common, right? They all need memory. So I think your memory related stocks like MU are going to benefit from this, right? It doesn't matter if you have a TPU, doesn't matter if you have a GPU, doesn't matter what type of chip you have, you probably need some type of memory, right? So stocks like MU could probably see a lot of gains from this year, right? The next thing you got to ask yourself, what are some monopolies within the space? You got companies like ASML, right? Which makes the EUV technology that some of these chips use and whatnot, right? And I think they're the only producer or the most advanced producer of this technology, right? So they'll probably see a lot of benefit since, a lot of these companies are spending a lot of money on building the AI infrastructure out. So you got to ask yourself, what companies are going to see a lot of benefit from this in the short term and which companies are hoping to see benefit from this in the long term, right? And I would bet on the ones that I know are going to see some benefit from this in the short term. So that's my take on it, right? Could be completely wrong. It's just my subjective opinion. So let me know what you guys think about this. Let me know if you guys learned anything new in this video. And let me know what you guys think about AI. Is it going to do well in 2026 or is it not? So make sure you like, comment, subscribe, and I'll see you guys in the next one.